Hello dear traders! November was a tough month in the crypto market. It to some extent drew a line under the past and perhaps marked the beginning of a new era in the history of digital money. After all, the once second largest crypto exchange FTX not only collapsed but also delivered a severe blow to investors who lost millions of dollars and its founding father who lost his fortune. FTX aftershock is now felt across the crypto industry, promising much bigger problems. Still, there is some good news. The Binance crypto exchange, following the meltdown of its main rival, predictably cemented its dominance in the crypto market. Its founder and CEO, Changpeng Zhao, may now breathe a sigh of relief as his main competitors are now lagging far behind, and his firm accounts for 75 to 77% of all trading volumes in this market segment. In the meantime, one more company joined the club of crypto firms that went bankrupt in 2022. On November 28th, it became known that crypto lender BlockFi filed for bankruptcy, citing FTX exposure. BlockFi could not cope with the liquidity crunch. Meanwhile, the company's top 10 creditors alone are owed nearly $1.2 billion in debt. As we can see, FTX aftershock is now causing damage to other crypto exchanges. Thus, lending firm Genesis Global Capital and hedge fund the Gallows Capital are reportedly facing huge losses. Meanwhile, Wintermute, one of the largest market makers, said it has $55 million on FTX. All in all, the FTX meltdown seriously undermined trust in the cryptocurrencies. And the main problem here is that many institutions will likely get rid of their crypto assets and stay away from them from now on. This in turn will put an end to the correlation between stocks and Bitcoin, especially on the back of series of crypto hacks, errors and fraud. So it is possible that we are witnessing a turning point in the history of the crypto industry. It seems that investors and market experts are increasingly wondering how big are the crypto-related risks, and this is a very serious problem which is instinctively linked to another issue, namely a general drop in the price of cryptocurrencies. Thus, the value of Bitcoin, the most popular digital asset today, has fallen by more than 70% from the peak of 2021. So what's next? The answer to this question can be found on the chart of Bitcoin, which tracks the coin's movement from the year of its inception to November 2022. Of course, we won't be able to determine any significant signs of future movements. They are based on historical volatility. Still, there is something else on the chart, namely that Bitcoin may fall by another 50%, below 7,500. But its rate will still be considered a long-term uptrend. Therefore, the flagship cryptocurrency in search of a bottom dropped to the level of $16,144 in the past 7 days. Meanwhile, the highest price was recorded near the mark $17,110. In general, however, Bitcoin surged by an impressive 5.5% in a week and ended the previous month in the green price channel at $17,144. There have been several reasons driving the coin up. Firstly, the presence of hodlers ready to keep crypto assets in the long term, no matter the selling price. This week, despite the previous losses, both shrimps and whales started aggressively accumulating coins, which in turn boosted their price. Secondly, a rise in Bitcoin came after Fed Chair Powell's speech at the Brookings Institution. The time for moderating the pace of rate increases may come as soon as the December meeting, the Fed's boss said. In addition, the US dollar index lost the regulator's support and tumbled to the area of 105.9 points on Wednesday. Ether gained 14% in the reporting period. On Wednesday, the asset traded at $1,299. The gap between the weekly low of $1,163 and the weekly high of $1,299 is not so wide, which illustrates the low volatility and stability of the exchange rate of the second largest cryptocurrency by market capitalization. Technical analysis suggests that recovery in the Ethereum price above the mark of $1,250 could indicate that the coin has hit the bottom. By the way, the stolen FTX funds appear to be in motion. Hackers dumped the stolen coins, converting them into rent Bitcoin. In this light, Ethereum sank below $1,150, a multi-week low. Meanwhile, in his blog, Ethereum co-founder Vitalik Buterin shared his thoughts this week on how to restore confidence in crypto exchanges after the collapse of FTX. Indeed, there is a lot to think about. The collapse of FTX crypto exchange clearly demonstrated how a token can bust in a few days or even hours. On the other hand, at the time of market crisis, the safest investments are in those assets that performed better before a crash. This means that Bitcoin and Ether have a good chance of staying afloat and strengthening. Our weekly review of the crypto market is now coming to an end. Have a nice trading week. We will see you in our next video. Take care.